Hi, everyone. Welcome back to the show. I'm your host, Ankur, and today I have a very special guest on the line with me here today, Andy Mattingly, who's the COO at Forum Credit Union. Andy, welcome to the show.
Thank you for having me on, Anchor. I'm really looking forward to this discussion and everything that we're going to discuss here. I think everyone's going to find pretty useful.
Yeah, I think so too. So to start things off on this show, we love to really understand a little bit more about your company and your role today. But also, what's really interesting is to hear a bit more about how you got to where you are. So that prior journey, I think, is really important as well.
Sure. Well, start a little bit about Forum. We're a central Indiana-based credit union. We are kind of a community charter, meaning anyone who lives or works in the state of Indiana can join our credit union. We're a very focused organization on technology. Our history goes back, and I'll explain a little bit more of this later as we get into some of these things, but our history goes back that we've always been on the forefront of leading with technology. We do our own home banking. At one point in our career, we developed our own lending system, an automated lending system. We do all types of lending, from mortgage lending, consumer lending, commercial lending, very focused on that. We're a little bit over 2 billion in assets on our books. We have about another 1.5 billion in assets off of our books through our investments and mortgages that we do. One of the big things about my journey here is I started almost 34 years ago as a management trainee, and I've worked in a lot of the different areas of the credit union. Over the last 11 years, my focus has really been in the areas of lending, the area of, data analytics, business intelligence growth, and new product growth. So that's kind of what I've been doing the last 10 or 11 years. So I touch almost every aspect of the credit union. I jokingly say the only things they don't let me do is look at the books, and work on the books.
Amazing. I love that. I think that journey is super relevant because you've seen how things have shifted over time, and I think that prior context is such valuable intelligence for knowing, where new technology like Gen AI can fit in, right? Where it can have impact. I think all of that historical context is really relevant. So why don't we dig a little bit more into, prior to Gen AI, where were some of the AI applications that were taking place within the world of lending and underwriting, and what benefits did the company see in terms of efficiency and accuracy and other benefits that may have accrued to the end user?
Yeah, I think one of the biggest areas for, especially in the consumer lending and underwriting area, is this automation of decisions. And so this goes back a long time for us, working on this idea of the fact that there's a lot of easy decisions. I mean, there are so many easy decisions that we don't need to have a human um, look at it. I mean, it's kind of like you check the boxes and you go on. So I think that was the initial start with anyone, was it's like, well, this person's been on their job for 10 years. They're putting 10% down on a car and they have an 800 credit score. Why does anyone need to look at there? There are no additional things. We don't need to create any steps for it, meaning anything else that we need to close from them. They've they've been paying, they're going to pay. Why do we need to look at it? And that
Yeah.
was probably where we started on our journey and our goal of trying to get as much automated as possible. So, starting from that kind of like, well, these are the easy ones, and then what are some of the other things that we can do? And today, I will tell you that we probably do um, have a underwriting staff that's a third to a quarter less than almost anyone else's that's doing the kind of volume that we're doing because of the automation factor. And so it's just so important. Our goal is to always keep increasing it. We are getting really close to 60% of all of our consumer loans being automatically underwritten.
Hmm.
And the great thing is we look back at that and that performs better than our human interactions. Now, that's not a real fair comparison because all of our humans have to deal with the more difficult ones, but that just tells you that it's very cost effective to do that, and it's a much better experience for our members because they can apply and be approved right while we're talking to them, or when they're applying online, or when they're at the dealership. So for us, it's kind of a win-win-win. Make a great decision. It's a great member experience. And on the back end, we know the loan's going to be repaid.
That's incredible. I love how you frame that, which is there's a lot of easy, low-hanging tasks and decisions that that automation software can go and handle, and that reduces the amount of time it takes to go through the entire process. It reduces your expenditures. You could do the same volume or more volume with the same size team. And you've been really far. You're really far along in that journey. I think we talked to a lot of yeah, customers and prospects that are just starting out, right? And
Yeah.
they view it with apprehension because they don't want to get this wrong, especially because it's so core to their business and their business model. So why don't we take a little bit of a step back, because I think the outcome that you've experienced is incredible. Would love to learn about what preconditions there were that enabled that outcome. So how were you, and maybe how long ago did this journey start? So I guess how long ago, and then really how did you get started on this journey to start chipping away at the automation opportunities to ultimately land to the outcome that you are at today?
Sure. Well, surprisingly, this journey goes back about 25 years. At the time, we were looking at trying to figure out a way to automate, and we were looking for a system that would work for us. And what we found out is there wasn't a system that was going to work for us. So that's when we first ventured into becoming more of a technology company as much as a credit union.
Mm-hmm.
And we had two very smart people here that started. One very knew a lot about technology, one who knew a lot about the lending piece. And we wrote our own lending system. And it was so good, and I'm not trying to be, pat ourselves on the back. It was so good that we ended up with over 50 credit unions that were using our technology. And then about 2007 or 8, we sold that to a company that I won't say, who wanted to get into the lending space because they were in credit unions but didn't have a lending. And so that's how we kind of got into it. And we were looking at decision engines and tools to automate as much as we can. And we still use that system today. We now purchase it from the organization that we sold it to because we understand it, and it does lending the way we want to do it, which is
Mm-hmm.
as frictionless as possible. And so that's how we've kind of gotten into that journey, and we've just learned over time. When we started it, we were probably more focused on the workflow than we were on the automation, and we were at about
Mm-hmm.
maybe 10% automated, and that has just grown over time as we've felt more comfortable with it. And there's a couple of things that we do there. It's the workflow that's important, and it's also looking back at data and saying, for example, we don't need to get income verification on everyone. That was a big slowdown. And
Yeah.
think about this in 2007 and 8. There wasn't all of the tools. You didn't have a smartphone that you could take a picture and send it to us. So we had to get people to fax stuff to us or stop by the
Mm-hmm.
branch to give it to us. And we're like, what's the point in that? So some of the automation and things that we were able to do was to look back and say, these loans are all performing. We don't need to get the income because it doesn't matter. They're going to perform. So that's kind of been our journey, and it's kind of our mantra is to just to do more and more of that all along.
Yeah, it's I think what you've highlighted is really critical for our audience, which is process design and process engineering. Even without the automation, is really critical. So, are there steps
Yes.
that are necessary? How do you design the right sequence of steps? Can you remove steps in exactly the way you framed it? And then once you have a cleaner process down on paper and you engineer that through to the back end, like the technology that's there, then you could start identifying what are the steps that you could potentially introduce technology to actually skip portions of, right? And that's where you get
Yes.
partial, eventually larger swaths of automation. And that's incredible that you built that technology homegrown. We typically don't hear that. We know the challenges of kind of changing the DNA of a company to go and focus on homegrown tech, and then you were able to really even sell it that in a way where many other companies could benefit from it. So really, it's an incredible story. And I think maybe let's talk about the automation piece. So process design, having cleaner process engineering, all of that makes a lot of sense. In the verification letter, I think is a great example. when it came down to then looking at the process and then identifying which steps to actually start with automation, how are you able to go through that calculation?
Yes, so for us, what we started looking at is in that automation is what information do we need to make sure that we have so that we can make those automated tools. And so one is the system that we currently use that has, the decision engine on it is very easy to make adjustments to so that you can change ratios or whatever. But then it's also looking at, like for us, we looked at a certain credit score that we wanted. So we use a FICO. It's kind of an enhanced score so that we could look at that. And so that was kind of the first things is, well, do we have the right model in there? And how we test that is we do kind of a look back because it's not only about the loans that we approved, but it's also the loans that we denied and making sure that we're not denying loans that we shouldn't be denying. So we always
Yeah, sure.
do kind of a 2-year look back and we'll look at every loan we decisioned 2 years ago and then see how they performed. And then we can make tweaks based on that saying, oh, well, we are manually reviewing these loans and their charge off and delinquency ratios are way below our tolerance level. So now we need to go back and make sure that we're automating those. So then that's kind of been our process all along is saying, and then we look at loans that we denied and said, oh, why did we deny these, whether it was human or automated? We need to start approving these. So how can we build that into our model to make sure we're approving them? So that validation of our results is so important to improving our automation.
Mm-hmm, mm-hmm. I think that makes sense. It's you're able to kind of clean up the process and then figure out how to programmatically go and kind of make some decision points along the way, and then with that, maybe initial step is partial automation of the decisions that get made. Some decisions get made maybe all the way through. What was the experience like for the underwriters and loan officers that were involved in this process? So, and I think that one of the things that we hear is people that are in these roles, they don't want their process to change, and they're a little bit fearful of new technology like Gen AI. Although you've been doing this for such a long time, you've been able to navigate some of the personnel considerations on how to manage it, where it's not viewed with fear and apprehension. They're welcoming new technology because it's making their roles more efficient and more productive. They get to work on more interesting cases. So I'm curious sort of how you were able to navigate that with your staff.
Well, a lot of that, I mean, you bring up some good points, and we've been very lucky because with our leadership that we've put in our underwriting team, they are the ones who want to ask less questions. They want more of an underwritten. And just like you said, they really want to focus on finding those ways that they can help people and work on those cases and, interact with the loan officer and that and make decisions on it. And so we've been very lucky in that we have a great leadership in the underwriting, but we also have all of the staff that really buy into that. They would like to see more of it automatically underwritten and them just looking at the exceptions. And they oftentimes will come back and say, why are we looking at this? Because I'm approving every one of these. So let's figure out why I'm having to look at this because I don't want to look at this anymore because I'm just looking at it in 2 seconds, approving it. It can be done by someone else. So we've built that into our culture is that we want to automate as much as we can because there's still going to be a need for you, right? We still are going to have those exception cases. And that's what they want to work on. So that's been probably the thing that has helped us get to where we are. There is no that holding on, I'm going to lose my job. It's this makes my job better because when it kicks out to them, they'll have certain ratios and things that are already done for them. So they know where exactly to go. And maybe they make a counter offer or they're saying, hey, let's do this instead. So they have a path and it just makes their job easier.
Yep, exactly. I think their work becomes more interesting because they're dealing with the more complex cases that require their attention, whereas some of the easy decisions, easy tasks that are involved, they're automatically done, right? It doesn't take
Exactly.
a lot of thought to necessarily do. So I think that's incredible that's that kind of the state that you've been able to get to. Maybe let's talk about some of the areas that we commonly see companies struggle with, which is the document ingestion portion even. So the application has income and identity documents are submitted to verify what you need and pull information out. How is that being handled today? At your company, are you using like a generative AI or an AI application to help with that, or is that data classification, like the document classification and the document extraction, is that still being done mostly by people today?
It's mostly still being done by people. That's kind of one of the things that we want to go to, is where we're on our journey, is that we want more of that to be automated, or that we can use some of the tools so that we can verify some of that. And one piece, and we may talk more about this, but one of the big pieces right now is detecting fraud. And we're using
Mm-hmm.
some tools that are generative AI to help us detect fraud, just like looking at things that we may not be able to see that's running in the background. You're applying for a loan, and you say that your driver's license, or you give us a driver's license number that says it's from Indiana, but you are in Oregon applying. So that will be a red flag and say, okay, your IP address says you're in Oregon. Now, it could be legitimate, because it could be that you are in Indiana and your company just happens to be running, you're doing it on your company's laptop, and their servers happen to be in Oregon, and it looks like an Oregon IP address, but it's a kick out for our loan officers and underwriters to verify. And fraudulent loans is something that is continually growing, and we are continually looking at new tools to help us, decipher what are some of the key concepts, or not concepts, what are the key things that people are doing that would tip us off to more fraudulent loans. Because what I just shared with you, the person could just be in Indiana and it wouldn't kick out. And so then how do we so we're trying to look at more and more of those tools to help us with that. And then like what you said, like managing that documentation through some of the generative AI stuff that says whether we need this or not, and things like that. That's our big push over the next 3 or 4 years for sure.
Yeah, that makes sense. I mean, I think you have really good decision engine built out, which optimizes for loans that you should approve and kicks out loans that might need more human review, and then maybe some that are automatically rejected. I think the document portion is massive, because
Yes.
ultimately that is data that, when rendered in digital form, immediately becomes something that you can use downstream into the decision engine. So one big point of friction is taking the set of documents that are submitted in all the different forms and formats that exist, and unpacking that, right? So
Exactly.
yeah, yeah, and
And then,
it's a sorry, go ahead, Andy.
well, I was going to say, what you said right there is a way that we can actually help give people more loans. So let's say that we
Mhm.
get someone's data on their checking account. So we see their cash flow, so that we can look at that and say, hey, you know what? They're not having their rent reported, but we can see that they're paying this rent every month, and they've done it for the last 2 years. So
Yeah,
that could be part of our decision then that goes in. So exactly what you said, it's not so much getting the documents, it's what do we do with that after we get it, so that we
yeah,
can have that all automated. I mean, that is exactly what we're talking about right now, of where we would like to go with our lending, because it becomes more inclusive.
yep. I absolutely agree. I completely agree. There's so many loans that are maybe they're smaller size, or there's a level of complexity that's involved, that I think, it's basically underserved, because banks and credit unions aren't able to get to them, given the rest of the volume and activity that they do. So it's a huge enablement function, massive enablement function. And I think it's not so much about just classifying the documents and pulling the information out. It's about then some of the initial decision making, right? And part of that decision
Yes.
making is also identifying anomalous patterns. And I have a lot of experience actually working in anti-money laundering and fraud detection at very large banks. And what I've learned, this was 7, 8 years ago when I did this. I was an Israeli startup, really pioneering some of the activity here. Is that one anomaly or two anomalies aren't enough, but when you see a cluster of anomalous behavior, then that is enough to go warrant a much deeper investigation, right? So the example that you provided, basically having a driver's license in one state and then logging in from another state, if that were the only anomaly, maybe by itself in isolation wouldn't be quite enough. But if there are 3, 4, 5 different anomalies that tend not to occur together, now all of a sudden you
Yes.
have a much bigger case. And it's also tracking data that maybe normally doesn't get tracked, like the IoT data, the devices that they're logging from, the IP addresses, whether they're using a VPN or not, what email addresses are they logging in from, right? And especially if you're interacting with an applicant multiple times, as you're going in and submitting different docs, that's a different behavior that you're able to capture from the applicant every single time. So you have this crazy amount of data that if you needed human review for, you wouldn't be able to take advantage of.
Yeah.
That's where technology, when built appropriately and is able to kind of work through the decision making there, is able to go and support the later downstream activities that do require people to go and review.
Yeah, that makes total sense. And then, you hit it so perfectly in the fact that there is so much data that I think even I would say there's so much data that we have on people that I don't even know we have, that we could capture.
Yeah.
You know what I mean? And you just hit on some of the things that we don't even have a way to capture it, let alone how to use it, but it's there. And that makes perfect sense. Do you find that, like, in that data capture, that there's never too much data that you can have? I mean, how would you, because sometimes we get pushback from our technology team on, hey, we don't need all that data, but like, from your perspective, do you feel like there's never too much data? It's just how you use it.
Yeah, I think that's a great question. I think you can really get overwhelmed with the amount of data that's generated. And I think more data is better, but the quality of that data is paramount. So if there's a lot of data that is really hard to work with, maybe it's noisy, it's not complete a lot of the time, then in some ways it's almost better to say, let's not use this data because we don't trust this data. It's noisy, it's polluted. Let's work with the remaining data that's much cleaner, that we could immediately go and make decisions off of downstream. And then you get a working version of a subset of data. And then you come back to the other data points that were a little bit messier and more polluted, and you try to get that in order. I think when you try to take all of the data and try to work with all of the data all at once, then it becomes very, very overwhelming, to the point where it actually delays the impact to the business. The ROI to the business is a little bit delayed, because you're trying to solve a much larger problem, when if you break it down to smaller subcomponents, it can help quite a lot. So even in this fraud example, it's like you could use all the data streams, but let's just start with the most obvious things that you want to go and monitor for, and let's go and figure out a simple way to flag if several anomalies pop up in the subset of data that you want to consider, because that itself might be enough for now, and then eventually you incorporate more and more data. And I think our big thing is innovating from within. So trying to do more incremental innovation actually is more appropriate than not. I think we've seen massive efforts at like digital transformation or rip and replace, and occasionally that does work well, but more cases than not, it's too much to take on all at once. Especially in the banking industry, where your lending credit, it's mission critical, and also people's mandates change, the company's mandates change, right? So if you're betting on a 3-year project, and then personnel changes and the mandate of the company changes, but maybe we're in a different macro environment, all of a sudden your 3-year project, had you had the basically the runway to do it, maybe it would have been successful, but the odds are that 12, 18 months from now, the mandate will change and you will have a partial build that won't have much impact. And that's the kind of the dead end I think a lot of companies unfortunately get into as they approach this.
Yeah, that makes a lot of sense.
So I think as you're looking for other opportunities to automate, I think the document portion is huge. The fraud component is really big. How are you thinking about building in-house, so using your core engineering and technical resources, because you have done incredible work there, versus using models, using technology and tools, software from other vendors, even getting help from maybe third-party consulting firms to go and tackle areas that maybe you haven't worked through. And it's just the traditional buy, build, partner framework. How are you kind of going through the motions right now as you're trying to figure out what to do in-house versus externally?
Yeah, one of the big things that we are at is that we're in that more of that trying to partner. And so, I mean, really, we want to maybe build a little bit of it to be unique for us, just to work in things that we're doing, but then also partners. So we're kind of like you hit on where we have moved forward with a lot of the things that we're doing is that, you know, we always first make the decision on buy or build, but we're in an area where we're not really going to build it. What we just want to build is kind of the final piece of that. Like, what are the unique things that we like to do? And so whenever we buy something or when we're partnering, we want to make sure that there is some flexibility for us, because we know we do certain things uniquely. It's like in a lot of the systems that we pick, sometimes they may not be the one that everyone is taking, but we're taking it because it allows us a little bit of flexibility because we know that we may streamline things a little bit more than the rest of the group will be. So we try to not be tied into where we have to wait on the rest of the, you know, credit union industry to move to doing that. So that's kind of our philosophy and how we're doing those things. And we know we're moving into a frontier where we don't have a lot of people. We really don't have that kind of expertise in it. So we're going to rely a lot on partnerships and buying those things so that we can do the one piece of it that we might want to build, which, you know, is a very small piece of that.
Yep, I think that makes a lot of sense. You're open to different ways of engagement, and I think there isn't one decision. I think there, you know, on one area it may make more sense to build in house, like you said, and in other areas it may be better that you go partner with external companies that have done that component really well. And I think that is a difficult calculation that I think a lot of companies are going through. They don't know where to start and what to do in house versus external, and it creates a little bit of inertia because I think that when there's so much information right as there is right now, especially on Gen AI, I think you do get a deer in the headlights type of situation, right? And I think really trying to unpack into smaller decisions around this task or this workflow needs this sort of solution, and do we do that in-house or not, and then just make a decision in that capacity. You don't have to go and make a monumental decision to only partner, right? It's not just an exclusive decision. It could be
Right.
much more complex than that. So
Yeah,
um,
exactly.
and then when you're building this technology, how are you thinking about potentially introducing it to other credit unions? Because I know that the way you've built software in the past is that you were able to unlock that and make it available to more companies, which meant that like you were kind of originating some of the technology and then you're introducing it to your peers. Is the frame very much the same, that you want to go and build for yourself first and foremost, but then eventually potentially include others and have them also use the technology?
I think on a lot of the things that we're doing, our idea is that we'll, you know, work with things and then we'll probably with partners and just be a trusted resource for them as they want to take it out to other credit unions. I don't think right now we're looking at doing anything that we're going to, you know, be a consultant or anything like that for other credit unions. We'll just be more of, you know, we're looking for partners in different things so that we can build something and then they can say, oh, hey, this credit union is doing this, you know, Forum is doing this, let's come in and see what they're doing. And the reason why we like doing that, we have that in a couple other systems, is every time a credit union comes in, we learn something from them because they question
Mhm.
something that we're doing and we're like, oh, that's a very good question. We don't know why we're doing that. So that's kind of where we like to be, is that, you know, you're having that collaborative nature. And as other credit unions do the things that we're doing, then we can have, and that's the great thing about credit unions, is a very collaborative culture. Everyone's willing to share. And that's what we hope that we can attain with some of the things that we're doing. Just like in our lending system, we have a lot of people that come in and we have a lot of good calls with them. And then we, you know, reach out and talk to other credit unions to learn what they're doing. And a lot of times it's no more than, hey, you have this and you're using it uniquely. How are you doing it? Why are you doing it? And that's, I think, the role that we want to be, is more of that collaborative credit union, more so than taking it out and delivering it to the market anymore.
Yeah, I think that's a great frame, which is more collaborative, more information sharing. You learn by interacting with other credit unions, and they benefit too, right? So, and I think the surface area to cover in terms of how much lending activity can be done is so large, right? So I think there's a large enough kind of market share to go and take. So I think all of that makes sense. In terms of other generative AI applications and the strategy you're trying to put together, you mentioned fraud, you mentioned document ingestion, like classifying and extracting information from documents. What other areas are you thinking through? Just to highlight a few things that I think we've seen is certainly RAG type of applications. So retrieval augmented generations, where you can go and ask a question in natural language and then have it retrieve the answer from unstructured documents. That's a very common and popular one we've seen. We've seen querying of databases, so structured databases, maybe bypassing the need for a data analyst or a BI dashboard. That's very common. But I'm curious what you've seen from things that you've been discussing internally.
Yeah, there's a couple of things that we're wanting to do. One is that we're wanting to look at, we get a lot of industry data on what other financial institutions are doing here, say like in the auto buying space. We know what rate they're paying, what term, how much they're doing and all of that, and from what dealerships and everything. We'd really like to look at a generative AI model, because now it's all manual, but looking at that and saying, well, where should we be on our rates if we want to get this percentage of the business? Because we can't do all the business, but are we giving up too much on rate, or are we charging too much on rate? So helping us with that. And then that also leads into another project. It's somewhat related, but not directly, is we would like to go to where we have a deal-based pricing. I mean, right now we do risk-based pricing, and it's basically off your credit tier. And we do a little bit of, add a little bit to that to give a little bit of break to some of the people that are in the higher ends of the tiers, but not very much. What we'd really like to do is go to more of a deal-based pricing that takes in all of the parameters and says, you apply for this loan, this is your rate. And we don't have a rate sheet anymore. So, here's what you're like, here's what your rate is. And that's important. And the reason why it's important, it's funny because you can get, people are willing to see what their rate's going to be. And it's like in credit cards, we used to ask people to say, oh, how much do you want to apply for? Well, we created a situation that either they didn't think they could get very much, and then we gave them what they wanted, and then they go somewhere else to get more, or they ask for something too much, and we come back with a counteroffer, and they're upset. But it's funny when you say, I'm just applying for a credit card, and we tell you how much we're going to give you, you're happy, right? And we take away the friction, and that's a little bit of how we do that, is that we're taking the parameters, instead of saying, tell us what you want, hey, here's what you can get, and then your decision is, well, do I want that or not? And that's what we want to get to with our kind of what we say deal-based pricing, because I could be buying two different cars and I could get two different rates on it, because one of them is a car that is not going to hold value and all of that, and another one that's going to be very valuable. Well, there's less risk for us, so we should price appropriately. Right now, I'm going to get the same rate regardless of the car that I'm buying, or whatever else I do with that. So that's that's kind of the two use cases that go together, because one, we need to know, well, what's the low end of that and what's the high end of that we can charge, and then build in the rest of it on the other piece to get to that deal. So that's where we would like to be, kind of that's our next big thing that we're wanting to accomplish.
Yeah, I think that's the personalization there. So who is this individual? What is it that they're looking for, and take the proper context. And so it's much more nuanced, right? And I think the nuanced pricing does a whole lot better than just kind of trying to bucket them into some generic tier and then providing that. When you look at venture funding for startups, it's also what it takes into a lot into account. It's much more nuanced, and I think that works really well, because no like tier. It's having a generic tier doesn't really help, doesn't take into account what the product is, what the background is of the founders, how much traction do they have from the revenue side, what is their long-term vision, how well have they executed and plan to execute. There's just so many nuanced things that need to get factored in. And I think when you talk about lending, even on the consumer side, even for auto lending, I think that you could be much more nuanced. It comes down to data as well. How well can you track the data around lending that you've done? Do the assumptions hold? Can you kind of lean even more into that direction? Do you need to throttle it back in terms of the preferred rates that you're providing? So there's a really incredible feedback mechanism that if you have that in place, then all of a sudden it's going and dynamically changing the way that you handle future lending. And I think that that's incredible. I think that that is the future of lending. And it's incredible that you're able to kind of innovate with everything that you've been doing for a very long time within a credit union, right? I think that that's incredible. I wish more companies did that, and I think they will. Hearing from your story certainly here. What about the regulatory and compliance issues that we typically hear about working with generative AI, especially with these very large language models that are closed source, right? So OpenAI, Anthropic, Cohere, and others. We see that there's a lot of sensitivity around sharing data with these closed source model providers. And then some companies are deciding to just keep everything within their walls. I'm curious sort of what your present stance is, and then what things you're potentially considering for the future.
Yeah, that's a very good question because there's kind of a couple of pieces to the whole regulatory piece when you get to generative AI. First of all, what you brought up about sharing the data and where can it go, and that's something that we are currently working on. And we've looked at a couple of places because we can't just put the data out there to be in an AI model. So we have to figure out, well, how can we do that? And we've talked to a couple of companies that might be able to help us do that so that we can, meet our regulatory concerns on that. Then on the other side is the use of this kind of data, making sure it doesn't have a disparate impact because you do have the kind of the different regulations we have to follow, making sure that we're providing credit in an equal manner and not impacting. So like let's say we take a certain data source and a certain impacted group doesn't have that data because they've not been available to that, but we're making that a key decision thing. Well, then that has a disparate impact on that. So we have to look at everything we do on this and then justify that there's not a disparate impact. So we have to make those decisions and then look back and say, oh, would that have a disparate impact on a group or not? So there's a couple of pieces to that, and it's an evolving field because all of our regulators and our legislators don't always understand the unintended consequences of some of the regulations they put in, or they haven't even, thought about some of these things that people could be using. So I think it's going to be an evolving field, and it's one of those things that you just have to be very cautious with and always, it may sound like a great idea because you're looking at who your current borrowers are, but you have to make sure you're not forgetting about borrowers that you don't currently have, but you need to be getting them. So I guess that's one of my things that we are always trying to do is to make sure that we're not impacting someone that we don't have already in our lending pool, and we want to have them in our lending pool to make sure our practices don't keep us from getting them.
Yeah, I think that's a great way to frame it. Is you have to look at the broader impact, right? And I think sometimes that's not very clear until you actually kind of think through, well, how is that data being used? Is it introducing new biases? Is it going to have a kind of a negative impact on the way you've been doing business? I think that becomes really really difficult. Let's switch gears into one of the areas that you've seen work done with external vendors well, and I think before we started this podcast, you mentioned that you on the lending side, on the underwriting side, you have a really good partnership in place. I'm curious, sort of how you were able to evaluate which partner to go with, and then how they've been able to be additive to the business that you do.
Yeah, when we look at partners, one of our first criteria is how flexible are they going to be? And our current lending partner allows us to do a lot of things the way we want. And really what we were after was the decision model, not the workflow. And a lot of vendors want you in their workflow and they don't take as much time putting together what their decision model is going to be and how quickly it can be changed. And so that's very important to us. And so that we can make changes not only to the decision model, but to the workflow. And, the current vendor, we had a couple of years ago a finding from the examiners while they were on site that they said, you know what, you need to change how you do this. So we said, okay, we can do that. We changed the workflow that day, showed them the next day, hey, here's now the new workflow. Are you good with this? And they're like, yeah, we're not even going to put it as a finding. So that ability to make those kind of changes in today's world is kind of important to us, and to be able to be open. So, and I'm not technical, but having the ability to have the APIs, right? Something you could probably talk more about. But the open API nature of it is that we're allowed then to connect anyone else we want. So if we want a different document management thing or we want a different fraud detection, we can start connecting all of these and the workflows are already built in. So that is key for us, is how open is it, and is it truly open, that they don't, the other thing we don't want is a toll charge on the API for every call. And so that's the other piece, because that can get very expensive as well.
Yep, that's incredible. I love the way you framed it. I think that customer success function is super important up front. So how flexible are they working with you? Are they going to be a really good partner and take what you have in consideration? Are they going to challenge and push and shape you in the ways that you want that to go and ultimately get to a better outcome, right? It's very consultative up front, and it needs to be that way throughout. I think that's the only way you can handle very complex workflows in a regular industry in exactly where we are today. So that makes a lot of sense. And then I think the open nature of like an API first build, right? So having open APIs, I think is critical because it allows you to go and modularize what gets slotted in. So you could have a document management and a fraud detection solution and others. And I think that's exactly what we see, is that we think that the integration of different components and orchestrating across those components is where the big innovation opportunity lies, right? If you could do that very well, especially with generative AI, which it's very, very good at understanding context and moving information around through the different solutions that you have, fraud, document management, lending, and others. That's the holy grail. It's the middleware layer that integrates across the solutions that you've put together, and APIs are incredible at that, right? So I love the way you framed it, and that allows you to bring on other partners without being locked to one partner as well. It's not a closed system. And the commercial aspects, I think, are important, right? As you said, you don't want to kind of balloon in terms of cost over time in a way that's not conducive to the overall business. So I love that. I think that makes a lot of sense. And then in terms of working with this technology partner, are you then able to shape how that technology is used over time, or is it, it's like it was done once up front and then it more or less stays the same year after year? I'm curious sort of how flexible has it been over the years working with them?
Yeah, they've been fairly flexible. They do something where we can ask for something to be built into ours, like so to do a custom build, and then a lot of times, I would say at least 90% of the times, the things that we've asked for that they custom build for us then end up in maybe a release 2 or 3 places down, and so then we paid for it ahead of time, but then we also get something back when they actually do put it into their release. So they've been very flexible with that. And they've also been very flexible in allowing us to do some custom development. Not everyone is doing some custom development that then can be, they're like, hey, we're never going to use that, but you can have that in your version of it and keep it going. So that to us has been really key of staying with them, because of just that. I mean, that's the ultimate flexibility. We can pay for them to put something in and we might get it back if they use it, which they use a lot, but also saying, hey, it's your software, it's your model, use it the way you want to make it work. And that's just been so key for us.
That's incredible. I love that. It's like flexibility in areas that you need it, but then they're able to learn from it and then make it better for you with the future release, right? So to maybe extend it. You're probably also seeing benefits from the technology that other clients of theirs are asking for and have pushed them for. So you kind of get a best in breed through those interactions. How do you see the role of generative AI and underwriting evolving in the next 5 to 10 years? And what steps is Forum taking to stay at the forefront of this big inflection point with Gen AI?
I think that we're just on the very cusp of what it's going to do, and it's just going to grow as we're starting to figure out ways to take in additional data sources. And, it's just going to be more important to have that generative AI so that we can learn, so that we can make better decisions. And I guess this is a question for you, if you don't mind me asking this. I know that we're not there yet, and some people say it may not ever happen, but I do believe at some point we're going to be an open, where we're going to be an open banking. And we're going to have access to everyone's data. And to me, if we get to that generative AI, you need to be really good at that once you get there, because now everyone's an open book. I mean, do you feel like that we're someday going to get there? And don't you feel like the generative AI is going to be critical for those who are going to survive in an open banking world?
Yeah, I mean, I think open banking would be massively valuable to have. I think there are huge regulatory considerations. Like, just I think that's going to be really difficult. I think if we can get across that, I think you enter a realm that is really ripe for generative AI. I will say that. So, like, once you're able to get to an open banking world, generative AI, because it just can understand and work with the amount of information that's present there, and other AI technologies, right? Not just Gen AI, but Gen AI is kind of leading the pack right now. Um, it's going to be a game of like who adopted it best and who's adopting it best versus not. It may not seem as big of a like an existential consideration right now, but I think it does become that. I think the ones, and if you look at big inflection points like the advent of the internet, advent of mobile, and then Gen AI now being the even bigger than potentially both of those prior ones, it's so massively monumentally important that we adopt this technology well as business leaders. Because if we don't, and we miss that opportunity, then as data becomes more available, especially like an open banking world, then the ones that have Gen AI built more into their DNA, whether they've built in-house or they've partnered or they've done a combination of the two, those are going to be the ones that win, right? So I think it's preparing for that competitive threat that is rapidly emerging right now. So I think you framed it perfectly there.
Thank you.
Well, Andy, it's been amazing having you on the podcast. Really look forward to seeing where things go in the next year or two. Would love to have you back on the podcast to talk about that at some future point in time. But where can our audience find more about you and then more about Forum? We'll make sure to include that in the show notes.
Sure. I'm on LinkedIn, so it's Andrew Mattingly. So it's Andy, but it's Andrew, formal name, on LinkedIn. And then at forumcu.com, you can find out a lot about Forum. So I'm always open to discussions, because talking to people is how you learn things, and I like to learn.
Yeah, and so does our audience. So really appreciate that, Andy. Thanks for being on the show. It's been an incredible episode, and really look forward to touching base with you in the next year or two.
Sounds great. I really appreciate you having me on. It's been a great conversation today.